Let's move on to Kenya's market for the day. Just looking at the performance for this Monday, down by 0.25%, 4,953 points. Looking at turnover there, vibrant on the day with turnover up by 48% relative to Friday's session and around $5 million exchanging hands. Just looking at some of the movers on the day, East African breweries, Bamburi Cement and KCB all accounting for just over 70% of the trade on the day. Looking at how the currency is faring against the dollar, 85 as it stands. We're certainly seeing currency weakness a theme right now, and that of course has been something that we started to see playing out as of last week and progressing into this week. So we'll delve into all of that with our market watcher now. We've got Rufus Manyasi, investment analyst at Tsavo Securities, standing by from Nairobi. Rufus, thank you very much for joining us today. So before we get into the equity market, what do you make of the weakness in the shilling? Because it has weakened by about a shilling, in the past month, and certainly now trading at around 85 to the dollar. Do you think that this is a level where it could settle? Do you think further weakness is bound from here on out?
Well, I think the shilling is at its annual usual trading range, so it's no cause of worry. But with the recent weakness, I think it's because of the cyclical monthly purchases, of oil by the oil operators. Hence, that demand for the US dollar is causing that weakness to happen. But I guess after we enter into the first week of next month, then we are likely to see it strengthen a little bit. Perhaps go back to the to the trend between 84, 84.5, which has been the range in the last 3 months.
Mm-hmm. So there we go, not too concerned on that front, as you say, settling into a predictable pattern there. But certainly is weak. Looking at the equity market right now, we of course saw Rev Pingo reporting today. Now, 7% drop there in the first half pre-tax profit. That's largely blamed on cost. I mean, do you think that management should have put in cost control measures earlier? Do you think that this drop back could have been prevented, basically?
Well, yes, I think so. If the management had put more effort in terms of maintaining their costs and cutting down on the costs, perhaps we might have seen a different return on their bottom line. But however, I think the management has done really well in the face of what happened in the last 6 months. We're talking of interest rates, still in the double digits. So I think they've really done well, even to produce, a slightly, okay. Of course, the profit has come slightly lower, but I think in the face of what happened in the last 6 months, I think they've done really well.
So a credible performance. Does it still make for a good investment, though?
Well, I think my take on just the whole sector on agricultural is a bit of an no-go zone right now, because the prices are a bit choppy. Since we entered the year, the prices have not really entered into good trends, and we've not really seen really good trends, maybe with the exception of Sasini. But the rest, I think they may be good long-term plays, but for short-term plays, I think they're a bit choppy, and I think it's a no-go zone right now, despite the good results like we're seeing from Rev Pingo.
I mean, but for the longest while now, you've seen agricultural stocks trading on single-digit PEs and said to be so cheap, and everyone talking about the re-rating in the sector. Is that likely to ever come? I mean, what do you see as a catalyst for that?
I think one of the challenges that investors face, particularly with that sector, is the liquidity of the shares. That's why you see investors don't really pay attention, particularly in participating in that particular sector. And even when you look at in terms of pricing, most of them are trading in triple digits. So I think that's really a put-off for most investors. So they rather choose on other sectors where the price is a bit more pocket-friendly. So I guess maybe on those two challenges, I think if there's a bit of reversal on that, perhaps we might see more increased participation.
Mm-hmm. Let's just move to Kenyan Cobalt, because the stock received much attention last week because there was a restructuring notice that came through, and the company basically is saying that things are looking a lot better in Q2. I mean, they had that massive loss. I think it was 6.2 billion shillings last year. So now they're looking to sell assets to plug the gap. Do you think this is the wise move?
I think it is a wise move, and I think even from a market's point of view, we want to see such moves happening just to win investors' confidence back into that stock. But I think when you look at the sector, I think it's really despite the huge loss that they suffered last year, they're still in a stronger position compared to its competitors. And I think in terms of its diversification geographically, in terms of the cash reserves that it still has, and even with the able management, I think the stock is really well placed, even for to have good performance for this particular year. And yes, we've looked at some of their proposals on what they want to do. They said one of the things they're still open for, for a strategic investor to come have a stake in the company. We also, like saying one of the proposals, sell some of the non-core assets. I think these are good moves in just trying to reestablish itself within the sector. But I think it is a good stock to watch.